Christian, the price of gold has dropped significantly lately. Last month, people were still talking about a short-term correction, but the subsequent price increase failed to materialize. What is the background to this, and why are there so many setbacks at the moment?
Yes, there is a very good explanation for that, which might sound a bit contradictory at first, and that is it's inflation. Gold rises in the long term because of inflation, but in the short term, this setback is now due to inflation. And why? Because the American Central Bank did not change the key interest rate on June 17th. But not only that, the new Fed chair has explicitly warned of the danger of inflation, of a possible rise in inflation and possible rising interest rates. And of course, a lot of money has now flowed into the United States, into the paper system where interest is generated, so to speak. Gold does not have any interest in the first step. Now money is moving away from gold. But in the long term, exactly this inflation will drive the gold price up again.
What probably interests many of our viewers now, how will things continue, or rather, why does the price continue to go down despite the current crises? As we know, large central banks, including the national banks, are currently buying gold on a massive scale.
Yes, you have to look at the background that gold is still about 25% above the previous year's value with the gold price. And there has been a new high every year in recent years. So now we are seeing a correction. In fact, we are observing this very closely. Over the summer, there may be further corrections, and we see the long-term upward trend at a healthy line of about 3,800 US dollars per ounce. So it could settle again a bit above or a bit below. That is then the long-term upward trend. That means it can still go down a bit, but in the long term, the gold price will pick up again.
You've touched on an exciting point there. You have also mentioned it again and again in the past. Such setbacks can also be an opportunity to get into gold. Or is there also an ideal time here to invest even more in gold, or to invest in even more gold? Or when should you also get in here if you are perhaps a newcomer?
So if you are a newcomer and want to get in, you have already made the right decision, yes. Because gold protects against inflation, and gold should be seen as asset protection first and foremost, and not as speculation. But when do I buy something valuable? Do I buy when prices are rising? Or do I buy when prices are currently having a setback? Of course, setbacks are the best opportunity to get in, and especially if you're a new gold buyer, then start doing it gradually now. You can also buy in stages and then have a good average price, but now is the perfect time.
You just touched on this point. What strategy should one follow here as well? You just said there are more setbacks coming. It could perhaps go even further back, or rather the gold price could go down over the course of the summer. What would you recommend here to our viewers, or what would you do and invest here yourself?
Yes, I have to seriously say that I've misplaced my crystal ball for now. So looking into the future, that precisely isn't really possible anyway. You know better in hindsight, but the market will likely correct itself a bit more. We'll see that on the futures markets too, when they pick up again, that the gold price will then level out. And the best strategy is to buy in slices, at least using a salami tactic. With the average price, you actually get a good result and don't have to worry anymore about having blown everything at once.
At the beginning of the year, there was really a record value for the gold price per ounce. Those were numbers that many didn't expect in the previous year. Now, if people actually bought gold last year or in the spring and are seeing the setbacks right now, what would you recommend to them? Many might panic and make snap decisions, selling gold at a significant loss.
That's exactly what they shouldn't do. Just imagine it's autumn, winter is just around the corner, and you buy yourself a beautiful thick down jacket, an expensive one, yes, really warm and a good brand. And then you want to try it out, and the next day you go outside. But it's a sunny, warm autumn day. Winter has been delayed a little bit. Well, you won't just throw this down jacket into the nearest trash, but you'll, you know that winter is coming, and then you just have a few more days of sunshine without a jacket. And that's exactly what I mean with the gold. You buy the gold to protect your assets from inflation, to preserve value, to be able to sleep peacefully. And if you bought at peak levels now, looking back in 1 or 2 years, these peaks will have been bargain prices again because prices will rise. You can ask me in 1 or 2 years, and then we can chat about it again, and you'll see I was right about that.
So, in conclusion, you're saying quite clearly that you have to think medium or long term and shouldn't let yourself be influenced by such short stories like the setbacks in the next 1 or 2 months that might still be coming.
Well, quite the opposite. These setbacks are an invitation for you to either get in or buy more, as long as these prices are so, let's say, relatively cheap. Our gold will then pick up again, and therefore you should get in now and take advantage of that. In the long term, you want to sleep peacefully, but if you want to gamble, then go to the casino. In the short term, you have the hustle and bustle and everything, but if you want to live peacefully and stress-free, have your assets well protected, then put it into gold, into silver, into raw materials that are not available in unlimited quantities, and not into paper that can be reprinted endlessly.
Thank you very much, Christian.
You're very welcome.